Alright everyone, today come back and look at my experiment again. We see today price is 106 and I was sell my share earlier today $50 when it was 107.6. And this morning I was like making 8,900, but now since the price come back down, it dropped to 8,600. So the price is always really volatile. It's always going up and down all the time. And for now, our forecast August, at the end of August, it might be at 110. At the end of September, 115. And at the end of the year, 120. But the price is volatile and we never know that where it's gonna go. But for Solana price today, it went to 109.9 and come back down to 106.8. And also Ethereum went to 2,553, now at 2,468. And also Bitcoin went all the way up to 81,148. Now at only 79,717. So if the price go up to 115, I'm gonna sell another 40 share, and then 25 another 40. So it's every time it move 10 point, I'm gonna start selling. So my next one is 115, and then the next one is 125. When I'm gonna sell my position, and I start to slow down a little bit because just in case it go up to 200, so I have some more. I still have some more share to sell. And we look at the market today. We see S&P 500 went up about 0.72%. Dow Jones Industrial up 0.20%, and Nasdaq Composite 100 up 1.57%. Gold today actually come back down a little bit. Earlier this week it went to 47.52. Now it's only 4,631. We see the oil came down when the Treasury Scott Bessent put sanction against Iran. It came down, and then it go back up and come back down again. But now it stay about $83 per barrel. It went back up a little bit. You see SpaceX today went up about 0.89%, and Apollo actually came down 0.17%, and NVIDIA today actually went up 8.74%. And we see the interest rate, the lower end it came down but not that much, and the higher end actually went up. So that this is not good for the economy when the interest rate go up like that. So there's something go on. That's why when the interest rate go up, that's why this is start coming back down. The stock market and crypto start coming back down. All right, everyone, and today we let's see what is in the news today. A deeper breakdown of today's biggest finance stories. Thursday, August 27, 2026, and what they mean for the investors. NVIDIA confirmed that the AI spending boom is still very strong. NVIDIA was the dominant market story today. The stock finished up 8.7% after its earnings and outlook reassured investors that demand for AI infrastructure remains extremely strong. Technology gained about 3.4% as a sector and was only major S&P industrial sector to finish higher, underscoring how concentrated today's rally was. This matter beyond NVIDIA. Investors have spent much of 2026 questioning whether enormous spending on AI data centers will ultimately generate enough revenue to justify tech valuations. NVIDIA's numbers suggest that companies are still buying advanced AI chips aggressively. Salesforce provided additional confirmation. Its shares surged roughly 22.6%. The company's valuation is about 6 years after reporting better results and stronger demand for its AI offerings. Market implication. This is bullish for NVIDIA, semiconductors, cloud infrastructure, and AI-related software. But today's narrow leadership also means the broader market isn't necessarily as strong as the headline Nasdaq gains suggests. The Nasdaq jumped 1.6%, but markets' breadth were much weaker. At Thursday close, Nasdaq up 1.6%, Nasdaq Composite 100, S&P 500 up 0.7%, Dow Jones Industrial up 0.2%. The S&P 500 gained approximately approaching its record high. Year to date, Nasdaq is up roughly 14% and S&P 500 about 12%. The Dow Jones approximately 11.5% increasingly, and Russell 2000 remain ahead at roughly 21% year to date. So Russell 2000 is the small cap. This one is a small cap stocks. I think small cap stock is doing like better than all the big cap stock. But there is another important detail. Technology accounted for an unusual part of today's gain. That means I interpret today's session as strongly bullish for AI tech, but only moderately bullish for overall market. 3. Friday Jackson Hole speech could matter more than NVIDIA. Fed Chair Kevin Warsh speaks Friday at Jackson Hole. Markets are paying extraordinary attention because investors still don't have a clear framework for how Warsh intends to handle inflation. Warsh have deliberately reduced amount of forward guidance the Fed gives markets. He appears to believe markets, particularly the bond market, should play a bigger role in determining financial conditions rather than constantly relying on Fed officials to signal their next move. That sounds technical, but the investment consequence is significant. Under Jerome Powell, markets often try to predict exactly what the Fed would do next. Under Warsh, Treasury yield may become more volatile because investors have less guidance. Tomorrow I will listen specifically for three things. Does Warsh describe inflation as still too high? Does he emphasize keeping policy restrictive for longer? Does he acknowledge that high long-term Treasury yields are already tightened financial conditions? A hawkish answer could push Treasury yields higher and hurt long-duration assets such as high PE technology stocks. 4. Inflation is preventing the Fed from declaring victory. Wednesday inflation data came in slightly hotter than economy expected. That have pushed Treasury yields higher and reinforced concerns that inflation is proving sticky. This creates a difficult situation. The Fed wants inflation to move sustainably toward its 2% target, but the economy remains relatively resilient. Initial unemployment claims also indicated that the labor market remained firm. Strong employment normally sounds positive, but for the bond market, it means strong economy, persistent inflation risk, Fed stay tighter, Treasury yields stay higher. That's why sometimes good economy data actually cause stock to fall. The bond markets may currently be the biggest risk to stock. Treasury yields edged higher again today as investors prepared for Jackson Hole. This is the part of the market I pay particularly close attention to. Higher, longer yield affect nearly everything. Mortgage rates rise. Corporate borrowing becomes more expensive. Government interest expense increases. Bond price decline. High valuation growth stock become less attractive. For example, its investor can earn a much higher return in relative to safe Treasury security. They demand a higher expected return before paying extremely expensive valuation for technology stocks. That means NVIDIA can report tremendous earnings and stock can still eventually struggle if Treasury yields continue to rise. Treasury Secretary Scott Bessent is trying to influence the long end of the yield curve. One unusual feature of the current market is the interaction between Treasury policy and Fed policy. The Treasury Secretary Scott Bessent have expanded Treasury buybacks, including support for longer duration securities. Markets sometimes refer to the strategy as a treasury twist. The idea is important. The Fed primarily control very short-term interest rate through monetary policy, but mortgages, corporate debt, and valuation model often depend much more heavily on 10-year and 30-year Treasury yields. If Treasury can improve demand and liquidity for longer duration bonds, it could help restrain those longer term borrowing costs. So, there's an unusual tension. Warsh let the bond market determine long-term rates more freely. Bessent, Treasury action can potentially have contain long-term yield. The relationship could become one of the most important macroeconomic stories of late 2026. 7. Oil jumped approximately 2% because Iran tension remained unresolved. Energy markets reversed higher today. Brent crude approximately $89.70, up 2.1%. WTI crude is $83.53, up 1.6%. The catalysts were renewed uncertainty surrounding U.S.-Iran relation. Reports indicated Washington were not interested in returning to the previous ceasefire term. While additional sanctions were introduced, the Strait of Hormuz remains particularly important because disruption there could restrict a major route for global petroleum shipments. This has another connection to the Fed. Iran tension, oil rise, gasoline transportation costs rise, inflation pressure increase, the Fed has less room to cut rates. So, I would treat the oil above $90 per barrel of Brent is increasingly important for the broader equity market. 8. The dollar remains surprisingly weak despite relatively higher U.S. interest rates. The Wall Street Journal dollar index slipped 0.3% to 95.54 today. It's down approximately 0.4% for 2026. Normally, high U.S. Treasury yield would support dollar because foreign investors can earn attractive returns in dollar-denominated assets. But several forces are working in the opposite direction. U.S. fiscal U.S. fiscal deficits remain large. The government debt concerns have increased. Investors are questioning the long-term purchasing power of the dollar. Other central banks, particularly Bank of Japan, may eventually tighten monetary policy. That combination explains why gold and Bitcoin can rise alongside relatively high treasury yields. Sometimes that historically would have been less common. 9. Gold is trading around an extraordinary $4,610 an ounce. Gold futures settle around $4,009.70 per ounce, up approximately 0.25% today. Investors are balancing two competing forces. Treasury yields normally hurt gold because gold doesn't pay interest. But fiscal concerns, geopolitical risk, inflation, worries about currency debasement are driving substantial demand for hard assets. Tomorrow's Fed speech therefore matters greatly. Hawkish Warsh lead to yield increase, lead to dollar potentially increase, gold pressure. Dovish balance wash lead to yield decrease, gold could strengthen further. Bitcoin and crypto are benefit from some of the same macro theme. Bitcoin was around $78,811, up roughly 0.5% according to Wall Street Journal market report. Crypto has also benefited recently from Treasury action supporting long duration securities and from growing investor concern over fiscal deficits. And currency basement, crypto related equity rally strongly followed the Treasury's expanded buyback announcement last week. The key macro relationship to watch is Treasury yield decrease plus dollar decrease, liquidity increase, generally bullish for crypto. Conservatively, Treasury yields increase sharply conversely, Treasury yields increase sharply, dollar increase equal, usually bearish for crypto. That make Warsh speak tomorrow important for crypto, Solana, and stocks. 11. Consumer companies are giving mixed signals about the economy. $3 reported respectable revenue growth, but its outlook illustrates the pressure still facing lower income consumers. Revenue climbed about 7% to $4.89 billion, while comparable store sales increased approximately 3.7%. The company also benefited from 308 3 million of tariff refund. However, management plans to reinvest some of those benefits in lower price market and stores, lower price marketing and stores. Third quarter adjusted earnings guidance of roughly $0.8 to $0.95 per share was substantially below analysts' roughly $1.4 expectation. This suggests consumers remain highly price sensitive, something worth watching as consumer spending accounts for roughly 2/3 of U.S. economy activity. 12. Banks are fighting over how new capital regulation will affect them. There is also an important Wall Street regulation battle underway. Major banks disagree over proposal change to capital requirement. Different calculation methodologies could produce billions of dollars of difference in requirement capital release between institutions. This sounds boring compared to NVIDIA, but it can materially affect return on equity, lending capacity, and share buyback and dividends. At JP Morgan and Bank of America, Goldman Sachs, and Morgan Stanley, and other major banks. Lower capital requirement generally increase bank ability to return capital to shareholders, while stricter requirement can restrict lending and reduce profitability. What matters most tomorrow? If we're ranking the information for the investor tonight, I put it this way. Kevin Warsh Jackson Hole speech, very high importance. Watch the 10-year Treasury immediately after he speaks. Treasury yields, very high important. A substantial upward breakout could pressure tech despite NVIDIA results. NVIDIA AI momentum high important. Today earnings significantly strengthen the AI bull case. For oil and Iran, higher important Brent approach or exceeding $90 increase inflation concern. Dollar medium high important. A sharp dollar move after Warsh could provide another clue about how investors interpret Fed policy. Overnight signal might read approximately stock bullish but concentrated AI semiconductor, strong bullish, bond caution and bearish, all bullish price pressure, inflation for stocks, gold, bullish macro backdrop, crypto, two caution bullish. I think this one is a base case to bullish bearish. The biggest vulnerability is that NVIDIA is pushing the market higher even as the Treasury yield rise. Those two forces can coexist temporarily, but if the yield rise substantially from here, the bond market can eventually overpower even excellent tax earnings. Alright, thank you everyone for watching, and I think that's it for today. Let's look at our experiment portfolio one more time. We see Solana 106.96, so 106.96. So it went a little bit back up, and yes, it moved a little bit, but it's still there. And so I think everything it's look really good right now, and that's about it. And thank you guys for watching. Oh, one more thing, please do not do this at home. This one is just the experiments, and please don't follow my my investing. All right, thank you everyone for watching, and I see you one more time in the next episode. Bye bye.